All right, Walmart results are just out. Melissa Repko joins us now with the numbers. Melissa.
Hey, Mike, good to see you this morning. Walmart's reporting earnings of 67 cents adjusted. That's higher than the 65 cents analysts expected. The discounter also topped expectations for revenue with $169.34 billion. That's above estimates of $168.63 billion. The company raised its forecast for the year to reflect its strong first half, saying it now expects sales to rise by between 3.75% and 4.75%. And it expects adjusted earnings to come in between $2.35 and $2.43. I spoke to Chief Financial Officer John David Rainey, who told me that Walmart has not seen a change in shopping trends. He said every month of the quarter was relatively consistent. He said, we see among our members and customers that they remain choiceful, discerning, value-seeking, focusing on things like essentials rather than discretionary items. But importantly, we don't see any additional fraying of consumer health. It also saw strength across stores, clubs, and its website, notably with U.S. e-commerce sales growing 22%. And he said Walmart saw another promising sign. Sales of general merchandise, that's the stuff that's outside of its grocery department, was positive for the first time in 11 quarters, Mike.
That's probably going to be taken as a relief, I would think, by investors, considering that July in particular, I think folks felt was maybe a little bit soft for a lot of the industry.
Yes, John David referred to that, and he also referred to the concerning jobs report that created some concerns. And he said, we are not projecting a recession. He really kept talking about how they've seen consistent behavior, even with the start of the quarter. Yes, people are still watching their dollars, but there's no noticeable change, he said, and that's really the key takeaway here.
I don't know if you have the numbers offhand. U.S. comps or like U.S. comps ex fuel. I know some of the street was watching that.
Yes,
kind of that core.
U.S. comps were up, and they were up also globally. And one thing that John David Rainey said also is that they are seeing that people are choosing them not just because of price, but also because of convenience. He pointed to that e-commerce growth. And I think one thing that some investors may have been missing is that Walmart's made a lot of strategic plays here. It's been growing its third-party marketplace, growing its advertising dollars. It's launched a new private label brand in grocery. And those types of things are also moving the needle, along with attracting people who are frustrated by inflation.
Seeing U.S. comps up 4.2%.
4.2.
Ex-fuel.
Ex-fuel, they were up 4.2?
Yes.
I think the whisper going into this was more like 3%. That would certainly explain why the shares are up 5.
Yeah, exactly. And the other thing that was interesting that he mentioned is that they are seeing people who are just, being a little bit more willing to spend for seasonal items. And so seasons are very important. Back to school, he said, started strong. And generally that's seen as an indicator for the holiday season. So that may be some good news, too.
Really interesting. Shares are up almost 5%.
Looks like an all-time high, actually.
Right now.
Yeah.
Here's the only weird thing. Walmart is itself. Jim Paulson has the Walmart recession indicator. When Walmart shares do well relative to luxury shares, that's typically a sign of a slowing economy. So we have to read it both ways. Is it good or bad that they're going up? I think they're going up today for the quote-unquote good reason.
Yeah, and it's gotten complicated with the e-commerce side of Walmart, and
because you think there's a more upscale version of,
and just the market share gains that they've had. It's a little more representative, arguably.
Certainly than 20 years ago.
Yeah.
Absolutely, I would completely agree. Much broader swath of the U.S. consumer, or the kind of spending it would capture than in the past. Yeah.
Yes, that's the tricky thing to tease out. How much of this is because of Walmart's own strategic moves versus people trading down? Historically, you're right. When Walmart did well, it was almost seen as a concerning sign. Our even upper middle and high income consumers being forced to go to Walmart. But now Walmart's saying, hey, we're getting, a little fancier, or at least, even though like with Better Goods, its new private label grocery brand, most items are under $5, but it has a lot of flavors that might resemble a Trader Joe's. So it's a little bit more, appealing to a wider variety of consumers.
And perhaps most importantly, especially for equity investors, going back a couple of quarters when they first started to talk about choiceful, it's such an interesting neologism, but not choosy, choiceful, but that was the beginning of a sign that stock picking in retail was really going to matter. And boy, has it. So they're sticking with that theme without saying that they necessarily see any increase in softening of consumer spend overall.
I also asked him about pricing specifically and inflation, and he said it was flat this quarter. So all the growth that we're seeing Walmart report was from units rather than dollars. And for a long period of time, obviously, that was coming from everything costing more.